You arrive into the early afternoon here on Wall Street, and it's time for another On the Hour reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity to the chaos as we head toward the final stretch of the session. The big new driver this hour is in fixed income. According to MarketWatch, the bond market is rallying off the Fed's latest quarter-point rate cut, with yields easing as traders lean into the idea of easier policy. But there's an important caveat. One investment manager quoted in that piece warns that this move could look reckless come January if inflation or growth data snap back the other way. So you've got a bullish bond market right now, but with a very clear risk that the narrative flips quickly once we see the first data prints of the new year. That same Fed backdrop is also reshuffling the equity leaderboard. MarketWatch reports that Visa is pacing the Dow winners on track for its best day in about 8 months. Bank of America is described as seeing a great business on sale, and the rate cut is being framed as a potential tailwind for spending, payments volume, and valuations in some financials that had been lagging. It's a good example of how one policy move can breathe life back into selective pockets of the market, even on a day when the major indices overall look more mixed. On the risk side, stress is building in some of the high beta, story-driven names tied to AI. MarketWatch highlights Rivian's first-ever Autonomy and AI Day, where the company is outlining its self-driving and AI ambitions. But the stock is trading lower, and the takeaway on the street seems to be that big AI promises aren't enough. Investors want clear paths to profitability and execution, not just buzzwords. That's on top of the earlier pressure in AI infrastructure, where, as MarketWatch has reported, Oracle's 14% drop sent a chill through NVIDIA and other AI leaders as bubble concerns creep in. Together, those stories underscore that the AI trade is an area to handle with care this afternoon. In the background, there are a few important underlying themes to keep on the watch list. In Washington, MarketWatch reports that Senate votes aimed at shoring up Affordable Care Act subsidies have failed. That raises the risk of higher healthcare costs for a broad swath of consumers if those subsidies are allowed to expire. Investors in insurers, hospital chains, and managed care names will be thinking hard about what that means for margins and demand, even if the tape hasn't fully priced it yet. And on the personal finance and demographic side, there are two sentiment reads worth noting. One MarketWatch piece uses Philip Rivers's decision to unretire at 44 as a lens on the growing number of Americans who return to work after retiring, often for reasons beyond money, purpose, social connection, and changing expectations about what retirement looks like. Another story highlights a survey showing that about 72% of people say they'd be happier if they saved or invested more, with far fewer believing that extra spending is the path to happiness. Over the long run, shifts like that can influence savings behavior and flows into markets. Looking ahead to the next hour, I'll be watching whether this bond rally holds into the close or starts to fade as traders reconsider that reckless by January warning, whether Visa can stay on top of the Dow as the poster child for rate cut winners, and how the AI complex, from Rivian to the big data center names, trades into the final couple of hours. We'll tie it all together for you in the regular closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.